Hi, it's Alicia Carter, real estate broker and certified credit specialist. We're here again with all things real estate, your real estate and credit channel. Today, we're discussing the pros and cons of buying versus renting. Don't forget to like, share, and comment on this video. Most importantly, subscribe to our channel. Please stay tuned for the video. Buying versus renting. How do I decide? Buying a home has always been built into the American dream. While renting is more flexible, buying a home has the bigger potential long term payoff with tax advantages and basic quality of life benefits. Comparing the costs of buying are more varied and complicated than for renting. So it's important to look beyond just the numbers when making your next move. Of course, you put down roots when you buy a home. Although it's better to rent if you won't be staying long or if your plans are uncertain, that kind of flexibility, it does come with a price. It's harder to feel established in a neighborhood if you're not a homeowner. When clients buy a house, they settle in, they create a community. You can paint each room, you can knock down a wall, you create a hobby room without asking permission from anyone. Homeownership is also like a built in savings plan. It's true, even if you only have eyes for the bottom line, when you buy a home, you enroll in a forced savings plan. No matter how tight your budget, no matter what's going on, you will find the money to make your monthly mortgage payment. And plus, month by month, you pay down the mortgage and increase your equity. The amount of money you can sell the house for, less what you still owe on it. Over a lifetime, homeownership helps you build wealth. Buying a home does has big tax advantages. When you decide to buy a home, the one time that you can do is count on Uncle Sam's support. The significant tax benefits of buying rather than renting may be reason enough to invest. Homeowners can deduct mortgage interest on their federal income tax. This is a hefty deduction for many people because interest payments are often the largest part of the mortgage payment in the early years of owning your home. You can also deduct some of your closing fees and your property taxes. Now, paying a fixed mortgage, it stabilizes your budget. As anyone who has rented a home knows, rent hikes are the norm and often way out of control. If you're in an area without rent control, the landlord can raise the rent whenever he or she likes. Most important management companies will increase your rent over time with no financial benefit. Even with rent control, there are exceptions, and you can't count on your rent remaining stable. Now, if you buy a home and take out a fixed rate mortgage, your house payment stays the same for the life of the loan, whether it's 50 or 30 years. Of course, your taxes and your insurance may go up and down, but as far as your actual mortgage payment, that remains the same if it's a fixed rate mortgage. So, buying a home costs less than renting over time. Buying is the cheaper alternative over the long term. While your mortgage payment may initially be more than you'd paid rent, you'll spend less over the life of the loan if you buy. Rents may rise over time, changing the equation. Also, given the tax benefits of homeownership, your true out of pocket costs from day one can be less than if you rent. When you factor in the possibility that real estate values often go up over the years, homeownership looks even better. The cherry on the top is that when your mortgage is paid off, you can stop making payments, but you get to keep the house. Some of the cons of renting a property. Of course, you walk away with nothing. You're stuck in a lease. You could be forced to move if the owner decides to sell. You could have lots of restrictions. At the end, you won't have anything to say for it. No home equity or ownership, despite all the payments you made. Nothing to hand off to your kids or to sell for cash proceeds. Your rental payment sometimes may even exceed a monthly cost of mortgage. You create no ownership, no wealth. Your payments never stop when you're renting. Your rent could rise over time. You must deal with a landlord or a management company. Of course, no tax benefits. There will be rules, regulations, and limitations. Plus, it's more temporary, less stability. You're always at the mercy of the property owner. Then, let's say you have a pet. They can charge you a pet deposit, plus, you can pay an additional amount, what they call pet rent. That can be spread out over the entire stay. So, that's for pet related wear and tear. That can range from $10 to $40 per month. Then it depends on the animal and what your actual base rent is. But, let's get back to the home ownership advantages. It builds home equity and creates wealth. Can't stop talking about the tax deductions. It's your space, your rules. Any and all of your pets are welcome. You have the ability to remodel, expand, or tear down. You have the pride of ownership, social status, accomplishment. Potentially better for children and the family structure. Mortgage, of course, would definitely improve your credit history and your credit score. Plus, you'll have the ability to borrow against your home. No more monthly payments once the mortgage is paid off. Mortgage are the cheapest loans available. No landlords, no inflation hedge. Of course, it's a forced savings account. You can rent it out to others. You can sell and use the proceeds to buy a bigger and better home. You have a retirement nest egg. After all, it's the American dream. Don't forget to subscribe to our channel, like, and share our videos. If you need to reach me, our contact information is in the description. We'll talk soon. Happy house hunting.